Hey traders, this is Ron Haidt at Market Tamer. Happy Thursday. Hope you're having a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the SPY, which I have a bullish position in. It is 0.8% higher, volume almost 100 million shares. The trend is our friend, and trend is up. Tomorrow is quad witching, and of course September options expiration too. But there could be some volatility tomorrow. Might see some back and forth action. I personally am not going to get too alarmed by that. We still have higher highs, higher lows, despite what all these talking heads on TV or print or whatever they're doing keep saying that the PEs are too high, the fundamentals are bad. They love running those headlines. This hasn't happened in, so many years. And every time it's happened, yeah, I get all that, but they don't understand that the US market, most liquid market in the world, it attracts capital from around the world due to a safety issue. And if other countries, whether it's in South America or Europe, are having trouble, it's the one place where money comes in and comes out. And I've been saying that literally forever. It's defying, standard PE ratios and things of that nature. Now, typically September into October, a weaker period of time for the S&P. It doesn't mean the market crashes. It just faces more headwinds. So far, we had basically the first 4 days of September where we trended lower, and now we're just pushing higher. Maybe the pullback's not going to happen. Maybe the consolidation isn't going to happen. We're actually breaking out. Once we get into the middle of October, the seasonality starts to shift. And the end of October into the middle of December, literally the 15th, is very bullish historically for the S&P. Maybe we're just going to run ahead of time. And that also happens. And then if I speak to seasonality, I get questions on AMD at Market Tamer. And it's one of those stocks where it sort of defies logic at times. AMD, in fact, before I show you this, let me just show you a chart of AMD. Here we go. It's been just ripping higher in August, and now we're starting to see red bars come in on the daily. And it looks like we're putting in a bit of a top. And the question is, if the markets are ripping higher, why isn't AMD? Is this, maybe a bad time of year? And when you go to financial and you check it out, over the next 6 weeks, just look at this dotted line. It's actually pushing lower, right? Well, if I slide down here, I can actually read the data for you. Over the next 6 weeks, AMD has historically fallen by 6.4% based on 45 years of stock performance. So what does that mean? AMD has fallen lower in 30 of those 45 years over the subsequent 6-week period, which means 2/3 of the time, 66% of the time, this stock actually drops by about 6% over the next couple weeks. So if you ever wondered, man, why does my stock top out? And if you look at a chart of AMD, it was looking really, really good until it enters the period of time where traders are starting to leave the stock. Doesn't mean it's going to zero, doesn't mean it's going to drop 50%. But if you ever wonder why does stocks seem to stop cold and then start drifting lower, and meanwhile other ones are starting to rip higher out of nowhere, where is that hot money going, aka the smart money? They're pulling out of AMD, they're running to somewhere else. So I think it's imperative for every trader out there. It's like, hey, go to financial, type in your stock, see what the historical patterns are, and then all of a sudden you're going to say, wow, my stock was a rocket ship, and then magically it just stopped and it went lower. Bingo. That's when the big money seems to leave time after time and time again. All right. And by the way, on a side note, next week, I'm going to be putting together another webinar for an open house on financial because you've got to see this in action. We are coming into the strongest time of the year. The last 2 events, the registrations sold out. They hit max capacity. I mean, it's a free webinar, but we couldn't get any more in. So I'm going to do one later next week. I'll get you guys out an email. Just keep an eye open for it. And you will want to register immediately because if you wait too long, you're not going to end up getting in. All right, now let's take a look at CAT. CAT. It broke out of its trading range, and I highlighted that for you guys maybe it's a week or so ago, and I said watch the 200-day. We punched through it on the 18th, and now we just added 2 days. So the close on the 18th was around 149. Now we're at 156. So ballpark, what is that, about $7 higher. Now we're coming into this overhead supply range of these 4 previous peaks. This is the period where you might see the stock try to slow down. Or like today, it came off its highs. Because anybody that bought up in here, they're now being made whole. They're like, whew, I get my money back. Go look to trade something else. If we get above 160, there's nothing up to 170. Red Hat. This is why you want to be careful with earnings. Earnings ended up dropping. The stop now is, or it's not the stop, the target is now down here. If it could have gotten up through here with earnings, you had your gap fill target and then back up here. It didn't. Earnings went down. Here's Tilray. This stock is starting to get in the news. Back in the middle of August, it was 20 some bucks a share. It was just up to almost 300 a couple days ago. This is involving a pot stock. Some of these pot stocks are moving higher. This one in particular put in one of the biggest high wave dojis you're ever going to see. The intraday high was 300 bucks on the button. Boy, I would have hated to have bought that. And the intraday low was 151. It had about 100%, low to high move there. And today it was down about 17%. In this type of situation, I just think, personally, my capital is safer other places, but I understand the folks wanting to play momentum. On a daily chart, the blue line right now on your screen is a 5-day EMA. As long as I stay above it, to me that would be bullish. But if it gets below the 5-day, I guess you go to the red line. Well, geez, that's $76 lower from where it is right now. If I bring in, like a 5-day, 5-minute chart, or maybe make it a 15-minute chart, you can see how we're gapping up and moving lower. I don't see a whole lot of opportunity here. I suppose if we take out the intraday highs from today, maybe that gets you a shot up into here or something. But these things can be hazardous to a trader's health if you're not careful. But as of right now, it still is bullish, but you got a lot of distribution up here. A stock that doubles its value in a day, it's really hard to keep thinking it's going to go higher in the short term. 3 stocks that we talked about recently, 2 specifically from last night, Borg Warner and Harley Davidson. We'll start with Borg. If I zoom in here, I talked about how it got up yesterday at the highs and hit all these previous tops at 46. Look what happened today. We actually shot as high as almost 47, ended up closing still up 1.44%, but finishing below 46. Continues to be an inflection point above 46. Those previous highs up in there, and maybe the 200-day. So I'm still keeping an eye on this one. I really wish it would have broken out today. It would have showed some, strength, confidence. The fact it couldn't on the market being up so nice. So still some hesitation there. Harley Davidson, similar situation. I said it needs to clear these highs technically, and intraday we got above it, and we fell right back down. So today's 0.5% rise did nothing to solve the chart. We still need to get above, what was that closing high from June? 45.5. And that one was 45.30. So let's say 46. That's what we need to hit. And I'd love to see it close the highs of the day. Again, showing confidence. Now here is State Street. I highlighted this one last night. Said it needs to get above the 50-day. We need follow through because we've been above the 50-day before, but there's no follow through. Today there was. Target gap fill at 92.50. It's $3 higher. Then we have this little bit of old support here and here at 95. Then we have the 200-day. And once we start getting up into the mid-90s, all this will become overhead supply. Between now and then, I think it's decent reward to risk ratio. I would probably consider something like a 20-day EMA as an end-of-day trailing stop if it were me. Here's TSRO. This thing tacked on 2% today. We now have more than just a few days above the 50-day. We have quite a few. Target probably somewhere up close to 50. That's a lot higher right now. And I will end it there. So again, keep an eye out for next week's webinar on seasonality. It's really going to answer a lot of questions for you. If you've never heard about seasonality, it's called sector rotation, would be another phrase to use it, repetitive pattern analysis. It's absolutely stunning how these stocks tend to move up and down throughout different times of the year when the hot money is coming and going. And the big money and the hot money is what moves the market. Stocks need to go up on bigger volume, down on smaller volume. So if there's more oomph behind it, the stocks can go up. If there's more oomph on the sell side, stocks will go down. It's literally this little dirty secret that big funds don't want you to know about. Okay, so with that, I wish you guys a fantastic Friday tomorrow and a great weekend ahead. I look forward to seeing you in the next video. Take good care.